Hi, everyone. This is Christine Copper with Sotheby's Realty in Vancouver, BC, with your market update for November 2024 as we reflect on October's sales statistics. So the month of October has come to an end. We're going to take a look at all those numbers, and wow, there has been a surge in sales. This is the third highest selling month in all of this year. And it's a good indication that perhaps we're starting to turn that leaf in our real estate market. So, for those of you that have perhaps been sitting on the sidelines waiting to get into the market, make sure you watch this entire video and see what the numbers are saying, because now could be the time to start getting into the market instead of just thinking about it. Let me share my screen and we'll get right into the numbers. For those of you that follow me every month, you know we go through this table each and every single month because it gives you an excellent snapshot of what is happening in the Metro Vancouver area. These are the numbers for our Greater Vancouver realtors. Our board makes up everywhere from Whistler all the way to Maple Ridge and in between. And what it shows you is what's happening from the broadest sense in the market. Of course, if you have a property or product type that you are focusing on, each market is its own micro market, and we can dig into the numbers just like this for you. So make sure you reach out and ask. Let's take a look how the market is performing overall. October, we saw 2,632 sales. That was up 42% month over month and up 32% year over year. So you can see from a year ago, the sales activity is starting to increase, and it's even stronger than the month of September, which is traditionally the busy time of year. Our second selling season begins. What is fantastic news is we have been sitting at sales levels at about minus 20 to 25% below the 10-year average for sale, to give you a little bit of the finger on the pulse of what's happening in terms of the demand side of the equation. And we have now just jumped up to just under 6% below the 10-year average. That is a big deal. This is showing a sign of a recovery. Now, 1 month doesn't make a market, but we'll take a look at how things are shaping up here in November. And perhaps this is a beginning of a trend, even though we're heading into the traditional slower part of the year. So don't get me wrong, I'm not expecting to have blockbuster November and Decembers, as this is traditionally where things start to cool down a little bit. However, having stronger sales now is a good indicator that when things come back in the spring, we're going to see the activity. Sometimes it starts pretty quick, even towards the end of that January market. For those of you that want to capitalize on this time in the market, this could be some of the best times to get into the market and pick up properties at great values before the demand starts to show up in the spring market, which is traditionally the strongest time of the year. So we took a look at sales. Now, how are new listings? So new inventory coming on in the market. We had 5,452 homes come on the market in the month of October. That was down 11% month over month. So not as many homes coming on the market, to be expected as we're heading into winter season. And it is still 17% higher year over year. And it's sitting at about 20% above the 10-year average. So a bit more inventory than we're used to seeing over the 10-year average. So more listings coming on. However, this is not a bad thing, and you're going to see why in just a moment. Total active listings. So this is the amount of homes that are available for sale at the end of October. It was 14,477 homes. That's down 3% month over month. So less inventory from October and up 25% year over year, higher than we had last year at this time. And again, if you recall, a couple of years ago, we were in very limited inventory situations, which was putting upward pressure on prices. Now we have more inventory. Finally, we're in a healthier state in the market where buyers have more selection, the opportunity to sometimes take their time and do their due diligence. So something that our political leaders have been looking for to create more balanced market conditions. Now, in terms of this level of inventory, it's 26% above the 10-year average. And again, why that's not such a bad thing is you'll see see later on when we take a look at our historic inventory, Vancouver's market has traditionally been in a low inventory environment, which has helped support prices and increases in prices as market shifts. Now, the number that we like to take a look at as a predictor of where prices are heading over a sustained period is months of inventory, so MOI. So for those of you who are new and just tuning in, months of inventory, 4 to 6 months of inventory is considered a balanced market, a market that doesn't favor buyers or sellers. 5.5 months of inventory would be considered balanced market conditions. 6 months and above is considered buyer's market territory. So 6 months and above is a buyer's market. 4 months and below is considered seller's market. 4 months and below, seller's market, because there's just so much demand and not enough inventory to satiate that need. And therefore that elevates prices because people are just scrambling to purchase more homes and therefore put that upward pressure on pricing. So you can see here that the month of October ended off with 5.5 months of inventory. So sitting in that balanced market condition, but getting close to that 6 months, so close to those buyer's market conditions, which we have definitely been feeling over the last several months, particularly over the summer. And I would argue we had a very short spring market this year and started to feel that pretty early towards April and May. If you tune in and watch this every month, you can see these trends and it really does predict where prices are going. And you can see that in the next row below, which is our MLS benchmark price. So you can see right now the benchmark price for Metro Vancouver is 1.172 million. So just under $1.2 million, down 1% month over month, very negligible. And it's also down 2% year over year. And you can see here earlier in the year when we had lower months of inventory, prices were appreciating. And as we crept up into that balanced to buyer's market territory, you can see the downward pressure on prices below. So that's why we take a look at months of inventory from this global perspective to give you an idea of where things are headed. While we have higher inventory levels, you can see how we arrive at months of inventories. We take the amount of inventory and divide it by the sales activity for the month, and how many times we can divide this month's sales into our inventory gives you an indication of how many months of inventory do we have. If we continue to sell at this level and we didn't have any more homes come on the market, how fast would we sell through that inventory? And so you can see that this was quite a tightening from 8.1 months of inventory to 5.5 months of inventory, very much changing the landscape. And if this continues, then we can start to see months of inventory creeping back from balance perhaps into seller's market. And just wait until we take a look at Vancouver West and Vancouver East next. What's happening in Metro Vancouver for your detached townhouse and condos? Detached homes sales are up 26% year over year. Sales are up 40% month over month. This is a time, if you're a buyer, to be paying attention to these numbers. Last year, we're starting to see a lot stronger activity than we did a year ago, but month over month, we're seeing an incredible amount of strength in our sales. And as we saw previously, it's starting to reflect in months of inventory, which then starts to impact prices. So your benchmark price is sitting at $2 million. Year over year, you're up 0.3%, and month over month, you're down 1%. So for those of you that might be thinking, have I missed it? By no means have you missed it at all. In fact, this is potentially just the beginning. You can see there has still been some downward pressure on prices in this market segment, which could just be turning a curve from the global perspective of our Metro Vancouver market. Attached townhomes, sales up 41% year over year, month over month up 33%. Benchmark price is sitting at 1.1, and your benchmark price is up 0.4% year over year and up 0.9% month over month. Condos sales are up 33% year over year and up 41% month over month, sitting at 757 for your benchmark price, down 1.6% year over year and down 0.6% month over month. So you can see we're still feeling some of that downward pressure, but perhaps as things shift here, we're going to see some upward pressure on prices. And if you want to put it all into perspective, this graph here goes back all the way to 1977. So if you ever wonder why you want to own some real estate so that you have a paid off home one day over your head, you can see where things have gone over time. And yes, we've been bouncing around, but you can see that we've been bouncing around at these peak levels since, well, basically COVID. And we really haven't come off from those levels, even though we've had some of the highest interest rates that we've seen since the 1980s and 90s. And while there's been this sawtooth up and down here, you can see the detached market still a little bit in the lower part of the segment. You can actually see this bounce back up here in the townhomes and in the condo market. Is October just a blip? Well, let's take a look, because obviously 1 month doesn't take a market. However, today, November 12th, you can see that we're at 854 sales and we've had 1,636 units listed. I just take a look at this as a gauge. Usually, if we sell half of what we list, our inventory tends to stay tight and may even decrease a little. Once we're not selling at least half of what we're listing, we start to see that inventory accumulate. So far, November has been performing extremely well, at least to keep inventory levels where we saw them at the end of October, keeping things steady. But as you can see, pretty tight in some market segments. There's several market influencers that help drive the marketplace. One of them is consumer confidence. How confident are people that they're going to have their jobs and money to spend and make their mortgage payments? And you can see that we're looking at an all-time high here in October. So people are feeling good about their money and their jobs. So that's a very positive sign for the real estate market. Then you've got inflation, and we have now hit inflation at about 1.6%. This band here between 3 and 2% is the Bank of Canada's goal in terms of where they'd like to see inflation. We're hitting those numbers. So that's fantastic in BC and in Canada as a whole, which is what the Bank of Canada looks at. The rate of inflation is definitely on the right track and actually even below the 2 to 3% range that the Bank of Canada looks for. Now, of course, there are factors that can change this as we have had elections and things changing in our world, and different economic policies are probably going to take place. So this can change in the future, but right now things are looking good with respect to decreasing inflation, which also can set up the Bank of Canada to continue to decrease interest rates. Another market influencer is interest rates. And you can see here, I like this graph because it shows you this dark line. I'm sorry, it's fuzzy, but this dark line is the 5-year variable rate. And you can actually see that the variable rate has become more expensive than the 5-year fixed rate, which is influenced by the bond market, which we're going to take a look at next. And the variable rate is influenced by the Bank of Canada's decisions with respect to the interest rate. So currently, it's still better to take a fixed rate, but that's starting to change. There's not too many variable rate cuts to come that could actually bring things back to being pretty aligned. However, you're going to need to speak with a mortgage broker to really get the numbers and see what your level of tolerance is in terms of having a variable rate or a fixed rate, because while right now it looks like Bank of Canada will be continuing down its path of interest rate decreases, with any kind of unexpected changes or inflation pressures like the Canadian US dollar, that could cause the rate reductions. So right now, interest rates are heading in the right direction. We're going to have another interest rate announcement in December. The majority of the market is anticipating another decrease. Inflation's coming out November 19th. That's going to be next week. So we'll see how things are going. And if it's below that 2% target rate, then more than likely we're going to see the Bank of Canada reducing the variable interest rate further. The bond market, it controls the fixed term rates. And so I like to add this here because back in September, the bond market was sitting at 2.7. That's the actual bond market. Then of course, lenders lend it out to you at a premium. But I wanted to show that recently, back in May of 2024, it was quite high at 3.8. But recently, with some of the new changes, like the US election, there's a lot of positivity for the economic climate in the US and that their economy could be very strong. And that could be actually quite inflationary for us here. And we're also starting to see bond market reacting. Now you can see it went down from 2.7 up to 3.1. So the bond market's actually up a little bit in recent days. And that means it's predicting a stronger economy than we're anticipating, and or because of certain inflationary pressures that may come. So something to keep in mind. Another thing I wanted to mention is, in terms of the 5-year fixed term rate, it's probably going to be as good as it gets right now, bouncing around where it's at. It's that variable rate mortgage where you could potentially see further decreases from the Bank of Canada as we get more economic insights. And they do have a plan to move it lower. So it could be a strategy that you want to look into and could be a favorable mortgage product as things move forward here. Now, the other market influencer is inventory. So we were talking about inventory, which has been a relief sitting at 15,000 listings. Some of us gawk at it because we're used to only having 8 or 9,000 listings, because you can see historically, even like the last 5 years, like we really haven't had many times in our market where we've had 15,000 listings. Like once was in 2019 after the original stress test was announced, and that was like raising interest rates by like 3% all at once. And that, slowly changed and made its way through the market. And here we are, we're not even sitting at peak inventory levels like we were back in 2019, and even more so back in the GFC, the financial crisis, sitting at 20,000 units and well above 15,000 units. So we're nowhere near what has happened in the past. And you can see we're actually better off than in 2019. And things start to look like they're starting to tighten up moving forward. Okay, and other factors that could really influence this market, and particularly the spring market, are the recent rule changes. We've already discussed this, but for those of you that may have missed it, the stress test was eliminated for uninsured mortgage switches. So if you have a mortgage and you are up for renewal, you don't have to requalify under the stress test. So that allows more competition in the mortgage market, and you can shop for a different lender and hopefully get the best rate as you're coming into a higher rate environment. The insured mortgage price cap has increased from $1 million to $1.5 million, which means you can now put less than 20% down on a property that is over $1 million, but capped at $1.5 million. That's starting December 15th. This is a big deal. This is going to allow buyers in markets outside of Vancouver and Burnaby, where you can actually buy houses for sub $1.5 million. You could actually put less than 20% down if you qualify. So that is a positive in term and will generate more demand in the marketplace, particularly come the spring once this policy is in place. There is a new product for adding secondary suites to your homes. That's another product that's been rolled out. 30-year amortizations are available to first-time homebuyers and any buyer looking at pre-sale or new build property. And the stress test has also been eliminated to switch lenders. So we've covered that already. I'm Christine Copper with Sotheby's Realty in Vancouver, BC. That is my market update for November 2024. As you can see, next year is shaping up to be a busy market. If you've been sitting on the sidelines, make sure you reach out to us. If you're considering selling, now is also an excellent time to get in touch to monitor the changes in the market and be prepared. Properly listing a property takes time and preparation to maximize your value, understand market conditions, and they change very rapidly. There are different strategies that you may want to take. And sometimes if you're thinking, I want to sell in the spring, it's better for us to be talking in early January or even now, because there are logistics and things that you need to consider. With that, I thank you for your time and I look forward to seeing you next month. Make sure you like and subscribe to my YouTube channel, our Instagram account, and if you're not already, subscribe to our newsletter so that you can get this market update to your inbox. Wish you all the best and look forward to connecting with you.